What's up, everyone? It's Kadi with MoneyVest. So today's video is going to be on Datadog, a company that you guys have been asking for an analysis on for a very long time. So it was up a little bit over 28% after the earnings yesterday. So we're going to break down everything you need to know about this company from their earnings calls. We're going to take a look at the revenues, the earnings, the forecast, the guidance, and then of course calculate the intrinsic value on this business. So we'll go over the discounted cash flow, the reverse discounted cash flow, and of course the discounted earnings multiple model as well as the technical analysis on this company. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel, and links to our Discord and Patreon is going to be down below if you want to join. Of course, be a part of our MoneyVest community, get access to the early access to our MoneyVest Pro platform and a lot of other spreadsheets, including the intrinsic values and members only private videos as well. So links going to be down below. There is a 16% annual discount that's available till the end of this month. So let's just dive right into it. This right here is Datadog, up to $102, up 28% yesterday, up 24% this past week. And this right here was the catalyst. The earnings and of course beating expectations and also lifting their guidance resulted in a 28% move to the upside. So the company did report quarterly revenues of $547.5 million, up 25% on a year-over-year basis. The company basically is a data security provider for a lot of their cloud services and does compare well with MongoDB and some of the other SAP and Snowflake type businesses. So, other cloud computing names, including MongoDB and Snowflake, they are, again, databases, are cloud service providers. And the latest guidance is the cheeriest Datadog has been all year. Its stock fell sharply in August following a lower guidance as companies reduced cloud spending. And Datadog builds cloud monitoring and security products that work well with Amazon Web Services, Google Cloud, and Microsoft Azure as well. And the company reported quarterly revenues of $547 million, like I said earlier, and the growth was consistent with the results in the second quarter. Analysts were expecting revenues of $524 million, so we got a beat on revenue and also a beat on EPS. Adjusted earnings per share coming in 45 cents per share, better than the 34 cents per share expected. And they also bumped the revenue and profit view for the full year. They're now expecting fourth quarter revenues of between $564 and $568 million. For the full year, they're expecting $2.1 billion in revenue. And the number obviously is higher than what the consensus was at $2.06 billion for the business as well. And the fourth quarter is off to a good start, although usage does tend to fall around the holidays. And into the print, there was a lot of anxiety about whether Datadog would follow AWS's improving quarter-over-quarter growth and stable year-over-year, or demonstrate a varied disconnect and continue to decelerate on a year-over-year basis. But of course, the company dispelled any of these worries, and the analysts have the equivalent of a buy rating on the stock as well. So these right here, once again, were the numbers. Operating income coming in at about $130 million. Non-GAAP operating margin was 24%, again, improving. And more importantly, why Wall Street's going to be more excited about this company moving forward is because of the fact that they are turning the corner towards profitability. As I've mentioned time and time again, profitability is all Wall Street cares about. In fact, I've got a video coming out later this week, most likely, or sometime next week, which is going to go over this one metric that Wall Street cares about, right, at all times, and that's EPS. And they are very, very short-term focused. And of course, if the company does end up becoming profitable, like Palantir did, like Datadog is on the verge of becoming profitable on a GAAP basis as well, that creates a lot of excitement, that creates a lot of institutional involvement in that stock. And that's how we know the price moves. Institutions are what moves the price. It's not retail. They're the ones. They're the ones got a lot of liquidity to move the stock. Operating cash flow $152 million, with free cash flows about $138.2 million, and cash and cash equivalents and marketable securities were sitting at $2.3 billion for the company as well. So excellent balance sheet. And this right here is the guidance. They're expecting non-GAAP earnings per share between $1.52 and $1.54. So if you come over to the price right now, it's trading at about $102 per share. So 102 divided by $1.52, we're looking at a 67 times earnings multiple on Datadog based on 2023 numbers, based on the non-GAAP earnings per share. Now, 67. Is that too high? Is that too low? Depends on the analyst. For me personally, it's certainly extremely high, and I would not be looking at Datadog at about $102. We'll calculate our fair value here in just a minute. Now, this right here is the growth. Obviously, revenue is growing from $1.2 billion to $1.5 billion. Gross profits also up about 30-40% from $955 million to $1.2 billion. And we also do have operating losses. Again, this is on a GAAP basis, I believe, selling off. And of course, net losses were also at just about 5.4 billion, 2 cents per share. Again, on a GAAP basis, right? Non-GAAP, they are still turning the corner towards a profitability here. This is going to be the balance sheet. So again, marketable securities and cash equivalents combined sitting at just under $2.3 billion, with their total liabilities is sitting at $1.7 billion. And I absolutely love balance sheets like these, where the company's got more cash, more marketable securities, more assets than all of their liabilities combined. And that's what makes these balance sheets so bulletproof from a bankruptcy standpoint, because the company's got more cash than all liabilities combined, and they will still have more cash left over after they've paid off all of their liabilities. So that's phenomenal. Now, if you come over to margins, we are working with 80% gross margins. That's not a surprise. It's a packaged software company, and levered free cash flow margins of 21%. So we're going to use some of those numbers to kind of better understand what's the intrinsic value for Datadog, because if they're guiding for 2.1 billion, right, in terms of revenue, and if we apply a 21% margin, we're looking at a $441 million free cash flow for the company. So if you come over to a discounted cash flow for Datadog, and if you plug in 450 million to be on the safe side, and a growth rate of, let's say, 25% over the next 5 years, 12% discount rate, 3% terminal growth rate, 10% margin of safety, little to no dilution, although they have, I think, done a lot of dilution in the past, because again, it's a growing company, so you would expect nothing less. So take a look. Diluted shares count has gone up, but more recently it's been a little bit more stable, from 309 to 315 to 321. So they're going up very, very marginally. So let's just keep that at 0%, and we're looking at an estimated fair value of about $33.46 based on the current free cash flow margins. Now, let's just say that margins expand, right? Let's just give them the benefit of the doubt, and margins do expand to, let's say, 30%. Now we are going to be looking at, let's say, $650 million in actual free cash flow, same 25% growth, and we are looking at a $48 in intrinsic value. Now, reverse discounted cash flow, let's try to meet these numbers together. So let's say 40% growth, or let's say 50% growth, and there we go. Now we're getting somewhere 48%, or let's just do 47%, and boom, right there. That's where we are now currently sitting. Free cash flows for Datadog would need to grow at over 47% with a 30% free cash flow margin over the next 5 years in order to justify today's evaluation. So certainly that's very, very optimistic for my personal taste. And given the share count and the actual earnings per share, so if you do the math, if you come back to the presentation, they have pretty much set 351 million shares outstanding with $1.52 in earnings per share. If you do the math, 351 times $1.52, we're looking at $533 million in net income for the company. So let's just do 550 for them, and let's just grow the actual earnings by 25%, give them a 25 times PE multiple, 12% discount rate, 10% margin of safety, and about a 1% share dilution. And now we're looking at a 62.75 as the intrinsic value, and this is going to be that sensitivity grid for Datadog, which obviously is going to put them just under $63. And this is about me getting as optimistic as possible right now. 25% growth rate and a 25 times P multiple is going to put our intrinsic value on Datadog at $62.75. And if you go with a reasonable assumption here, that's going to be around $48 to $50 per share. So 50 to 62, that $10 range is really where Datadog's intrinsic value is going to be, personally, in my opinion. And 62 is exactly where the stock was back in April of 2023, before obviously rallying over 85%. So it was forming a little bit of a head and shoulders, but the earnings yesterday took it higher, over 28%. And now the next resistance is going to be all the way up here. Once again, at about $118, you can extend that further. You can see that this is exactly where we have previously gone rejected, validated as a support, rejected again, and that is going to be that next resistance level to watch for Datadog, and support level is going to stay but roughly around $62 per share for the company. So hope you guys enjoyed this video. Let me know your thoughts. Datadog is a company that has a lot of potential, in my opinion. Balance sheet is very good, but the valuation is incredibly high, super rich. Again, if you compare that $33 billion to $2.1 billion, so let's do the math here. 15.7, almost 16 times sales is where the company is trading at the moment, which obviously is very, very expensive at the moment. And let me know in the comment section down below, what do you think about Datadog? Are you buying, selling, holding? What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Don't forget, links to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member. And as always, happy investing. I'll see you all in the next video.